Hello, welcome to FinTech Impact. I'm your host, Jason Pereira. Today on the show, I have Mark Warnquist, CEO of InShare. InShare is a insurtech that specifically focuses on distributing protection solutions to the on-demand economy, the Ubers, the Lyfts, the gig workers of the world. And that is an interesting and unique challenge we're going to dive into. And with that, here's my interview with Mark. Mark, thanks for taking the time.
Great to be here, Jason. Thank you for having me.
Thank you. So Mark Warnquist of InShare. Tell us about InShare.
Well, InShare grew out of our experience at Uber. Myself, my co-founder, a bunch of us were Uber alums, Lyft alums, and Airbnb alums. We saw the challenges that from the inside that platform companies have in this space. Insurance is a top 3 expense item, a major blocker. And so we set out to do something better, move faster than incumbents, and build solutions that benefit and help the on-demand economy grow and protect the gig workers on whom the on-demand economy largely depends.
Excellent. So this is not a small problem, and we're going to dive into it. So you kind of already went into the history, but anything you also want to add about the history? Like, how did you guys come together to solve this problem? Were you all basically pulling your hair out trying to solve it individually and realize there was a market here, or what happened?
Yeah, so at Uber, we found ourselves just inventing stuff.
Oh, really? Let's say I've seen the docuseries, but continue.
The
theatrical docuseries.
The alleged docuseries. Yeah, I've seen that too. It is quite interesting, and it was a great place and an interesting place to work. They say 1 year at Uber is like 7 years anywhere else. So it's so we found ourselves in a space where there weren't insurance products, where we found we had to build it ourselves, invent it ourselves, episodic insurance, and incumbent carriers or insurance carriers were certainly not used to this market, and so we found ourselves having to engage them, teach them, partner with them, frankly, to help Uber deliver the insurance that it needed. It needed to say that every ride was insured. That's a lot of work. So I was responsible for a good portion of that, including serving claims, which happens with insurance in 71 countries, which was a whole other hornet's nest. Let's put it that way. And yeah, we found ourselves as we were teaching others about this area and building these solutions. Look, we can do this ourselves. Uber's matured. We've seen a lot of the maturation curve that the other carriers, the other platform companies are about to go through. Let's build something special, and let's do it differently than others. That's why we did this. And we pulled our hair out, by the way.
Yeah, no doubt. I mean, I think a lot of people no one ever stops to think about the insurance aspect of what they're doing, right? They go to do something because they want to do it, but they don't necessarily stop to say, okay, am I properly covered? Unless they're nudged, right? Or they're like well educated that you buy a house, you buy insurance, you buy a car, you buy insurance. And people naively would think in most cases that they're covered for their activity, for everything they do by that. But most, I mean, especially if we want to clock back to the infancy of Uber and Lyft, most insurance policies did not include commercial activities, right? So people were actually driving around not protected unless they basically got something like what you guys put into place. And this, I got to think, is a major change in mindset for the insurance companies. So talk to me about the early challenges you had with saying to insurance companies like, hey, we want to protect these people. But they're like, wait a sec, it's a personal car and now it's being used for this much use. And how did that break their brain and how did you get around that?
So the solution was to go to the states and the DOIs and say, we need a regulatory structure. We need a regulatory framework that says for Uber, for example, and Lyft, the transportation network companies is what they're called across most of the states. There needed to be regulations where the DOIs, the departments of insurance, would say, here's the insurance you need for various periods. You know, you probably appreciate that in the car share experience, there's period 1, there's period 2, there's period 3. Period 1 is where the driver's driving around, waiting for a signal that says there's somebody there that to dispatch to. Period 2 is when he or she's on his way to pick you up. Period 3 is when you're in the car. And so it took a couple of years, 2.5 years, to get to a place where nearly all of the states have that kind of regulatory structure. In the interim, Uber and Lyft had to do what they had to do to build insurance products to do everything they could do to fend off what you just said, that there's a gap in insurance. And they did that, but it was not a simple task. It meant that Uber and Lyft bought the insurance. It means still that Uber and Lyft buy the insurance that covers the drivers, passengers, and third parties during each of these periods.
Yeah, and this is, I mean, when we preliminarily talked, I mean, this is a challenge in a lot of ways. It's also a challenge in how do you underwrite so many tiny, small individuals, right? When the law of large numbers in the insurance world says that if I offer it to everybody or to a specific target niche, I can actually figure out on average what the risk is, right? You might be able to apply that to the car share, but maybe not, because people are now doing something they've never done before. So how do you face the challenge of underwriting so many tiny little contracts and doing so without putting yourself in a bad spot?
Well, I would say that we're entering phase 2 or phase 3 of that right now. So the first phase was to do it at scale and to treat, if I'm the bad driver and you're the good driver, treat us all the same. And to basically say to insurance carriers, here's my driver portfolio. I've got 100,000 drivers in the state of X and 200,000 drivers in the state of Y. And this is how many miles they're driving. It's all usage-based insurance. And there's a negotiation around the price per mile, et cetera, for that. But you're really not underwriting the individual risks in that phase of development, that phase of maturity. You're writing them in the aggregate and doing your best. That's called portfolio underwriting, but doing your best to nail the things that matter. And that's not easy, right? So the next phase, and I think we will be entering this next phase in the not too distant future, is bringing more discrete telematics solutions to the space. So that if you're the great driver and I'm the less than great driver, you're not subsidizing me, because today you are. And what really should happen is that there are aligned interests, aligned with me, the not so great driver, to be a better driver, just because it's going to affect my insurance costs. That world hasn't hit the gig delivery space or the gig rideshare space yet in this country. It has in other parts of the world, and it will in this part of the world in the not too distant future.
That's just it, right? You're buying fleet insurance essentially for the entire fleet, and then disaggregating that. But in actuality, right, the better drivers out there had a higher cost of operation than they would have otherwise if you were able to underwrite them individually. I mean, for all we know, these are people who were basically paying thousands of dollars a month for their normal insurance because they were terrible drivers. And those people were getting a sweetheart deal from you versus the opposite effect. So it's quite the challenge.
It is the challenge. So there are some standards. I want to say that, to be a driver on any of these platforms, you have to pass certain tests. You have to have, they're going to check your motor vehicle record. They're going to check your background check, and they're going to do all of those sorts of things. But even that said, there is a wide disparity in driving behaviors and driving performance when it comes to safety. And it is not unusual to see that the bottom 20% of drivers are responsible for the lion's share of the insurance costs.
Oh, wow. The 80-20 rule strikes again, does it?
It strikes everywhere, and it certainly strikes here.
So talk to me about the method of distribution. Clearly, you're going and talking to these, gig economy type companies. Are you pushing the kind of underwrite down to the end user level at this point, or is that still in the works, or is it still largely more fleet based? Still in the works. Is something that we're going to be bringing to market by the end of this year. So today it's still at that high level fleet insurance package, right? So engaging through the brokers, engaging these companies and working on them and on lowering their insurance costs and building better solutions for them. That's our value prop. The second part of that value prop is doing just what we said, and that's bringing more granularity to the underwriting and the pricing. So there's aligned interest, and those who should pay more do pay more. Good. So how are you collecting that information? Is this all cell phone based, or are we talking about the dongles that people are familiar with in their machine? And some insurance companies have had the dongles that plug into your utility port. So how are you collecting this information? So you can't use the dongles. This is a space where we're in the gig working space. You're driving your own personal vehicle, right? And you're your own independent contractor. And there are issues around control in that environment, at least in the United States and in other parts of the world. Too much control by the platform company creates arguments at a minimum that independent workers are no longer independent and employees, right? So that's not how it can work, and it's too expensive to do it that way, and you'll just never get off the ground. So frankly, the best and only way to do that right now is through the cell phone. And yes, cell phone mobile telematics is terrific. It's not the gold standard, but it's the best that is available for this use case today. So that's how we do it. And there's a number of ways to do that. If a company, now I'm not talking about the Ubers and the Lyfts, but a newer company does not have an app that allows for this, we can provide that for them. If they have an app, but they're not collecting the telematics, we can do an SDK integration and pull the telematics out of that. And if they have everything and just want to use it better for insurance purposes, they can API it into us, and we can use that data for insurance purposes. Excellent. I mean, that's when you think about the number of sensors in the phone, the mind starts to think about all the creative ways you can get that information. I mean, there's gyroscopes in there that can detect pretty much abrupt braking, or just even the amount of time it takes them to get from point A to point B will tell you if they were speeding or not, right? So there's all kinds of interesting data there. So, but that's an interesting, unique challenge, is staying on the side of, let's call it, of the labor law issues in this space as to when does someone become an employee. Not something conventional insurance carriers have to worry about, is it now?
Yeah, so they don't have to worry about it, but they need to think about it if they're going to offer products that are going to match and meet and be purchased by the platform companies, right? And that's when you sit on the inside and you see the many conversations and the great ideas about, we would love to do this for gig workers, and this would be terrific, and we could get more stickiness with workers, and how do we win the war for workers, and all that good stuff, which is good stuff and really good stuff. But sometimes it runs up against the wall called the uncertainty of classification, and the risk of that is something that cannot be overcome. So we need to be very mindful of that as we deploy and talk with platform companies about the products that, how do you deploy these products to do the right thing for gig workers in a way that's not going to destroy your operating model? That is the question.
Yeah. I mean, of all the things to throw you offside from a labor law perspective, one would think insurance is not one of the things that they're willing to endanger themselves over that. But it's still a very, very present concern they have to deal with.
It is a present concern, but there is in today's world, across the delivery companies and the rideshare companies, there is a scarcity of supply for drivers. And the only way in which these companies can drive revenue is if they have drivers, right? So they really they're very focused on supply. And one of the things that I think many have found, not all, and I'm not speaking for anyone in particular here, but the typical bonuses that are deployed, short-term bonuses to attract you to my platform versus somebody else's platform, they work for a very short period of time, and then you go back to wherever you were. If you want to create stickiness, perhaps there's a better way, doing more to take care of them. So that's the business proposition, but you got to do it smart.
Yeah. And I mean, in fairness, a lot of these people, the demand is coming from so many different sources that a lot of them are working for multiple, right? So you have people who will be signed up with Uber, Lyft, and say Amazon for like random deliveries. So that's another interesting challenge. Like, how do you deal with the gig economy worker or gig economy driver who's basically working for multiple companies? Is there an overlap? Are you profiling them? How do you handle that?
So let me start with no, we're not profiling them, because that would be a problem. But
well, I mean, I think it's more so of them being the ultimate consumer of this. Right. Like in creating a profile around, oh, you're doing all of these. Okay. Well, so it wasn't, profiling in a positive sense. Okay.
So no, I understand. I just needed to, the lawyer in me had to say that. I apologize, but it's,
not a problem.
But this is a reality. And there were, some years ago, it was thought to be by some disloyal to dual app. Today, it's the reality. Right, folks need to make a living. They're going to do gig work, and they're going to be on multiple platforms. So there's a couple different things. If you're buying a program, if a platform company is buying an insurance protection for the benefit of the gig workers that work on its platform, those protections extend to the extent that you are on dispatch or that you are working on that platform and not on another platform. That's a very, very typical solution. It's not a great solution for the gig worker, because the gig worker, when they go to work for platform B, may or may not have those same protections. So two ways of solving this. One way is to do everything you can to get to multiple platforms so that they are covered while they're on there. A second is to build, and this is something we're working on, but not 2022, but build a portable benefit solution that goes with the driver wherever they are. And people have been talking about that for a long time. But there needs to be, whether there's a government solution, which I frankly do not favor, or a private solution, which I do favor because I want to be that solution, that I think is solves this the best.
Well, yeah, and it actually brings in some interesting challenges, right? So the difference between shipping cargo or food versus people in terms of liability, right? Like there's how much time are you spending delivering meals for Uber versus delivering people for Uber, right? Like those are different risk profiles. And yeah, or when an accident does happen and they're on 5 different services, which service were you technically working for at the time? The underwriting, at the time of underwriting creates interesting challenges as well.
You've got your finger on it. So as you're thinking about it, writing in this space, maybe we should collaborate more, but you're exactly right? So whether or not our company can feel comfortable underwriting a particular risk, one of the key criteria is, do you have the tech that enables us with precision to know whether Mark was on platform A or platform B at that time? They won't know about platform B, but do you know whether they were on your platform? If you can't know that within seconds, frankly, because time 1 second you're here and 2 seconds later you're over there. You can't underwrite the risk because you're picking up everything. So there's a certain tech component to the underwriting that we need to know. That's very important. And you put your finger on something else very important. The burrito in the back versus the passenger in the back is a very, very different exposure. Here's what I think when I think about the sharing economy and why I love it. One of the reasons I love it. I think of the risk in this space as the cylinders in a slot machine, and you've got your assets that move in time, your users that move in time, and your uses that move in time. And every time you pull the lever, you got a different risk. And so you don't have that with standard insurance, frankly. And what that tells me is this is a data problem. This is a data science problem to solve.
No, it's absolutely. And it's going back to the burrito in the back versus the person, the burrito doesn't distract the driver. In worst case scenario, an accident causes a mess, whereas the driver can be distracted by the passenger, and the passenger can suffer a lot worse than a messy burrito. So yeah, it's an interesting challenge outright. And you're right. Data is the only way to solve it. And let's face it, this is done properly. This is an incredible win for everybody because the driver's protected. The cost is basically set at a affordable level because you're not just saying, well, we got to compensate for all the unknown risk by basically having people at a higher threshold, which is oftentimes what you do in group pooling. When you can get down to when you can truly understand the actual risk, you can price it properly, right? So huge win across the board there. Frankly, the learnings that you're going to get about end user behavior from all of this is going to be invaluable towards the general insurance industry in general, right? Because you're getting a deeper look or deeper understanding out of absolute pure necessity as to how people drive and behave themselves, especially when they have, think about just let's go back to the passenger versus non-passenger. One of the things that we don't differentiate on when it comes to pricing is, do I have small kids who could be distracting me in the back seat? When you think about that, frankly, that is a risk factor in consideration of how well I drive, as every parent who's ever threatened to ram the car into a pole has basically realized.
I think you're right. I think you're onto something. And it's really our thesis, right? So that's what we're trying to solve. It takes a lot of effort, a lot of work, a lot of programs, a lot of data to get to that place. But 10 years from now, who knows what assets we're going to be sharing and using? And that risk profile conundrum is going to be similar in that context. At least we're going to learn from today's world and be able to extend it. So the more that we can learn exactly what you just talked about, that is going to position us not just in today's sharing economy, but tomorrow's. And tomorrow's, I have the sense is, and I believe, is going to be, I don't even think we've seen the beginning yet.
Oh, I agree. And that brings up an interesting question we're primarily talking about automotive at this point. Are you looking at other aspects of this?
We're still a small company. We'll be 30 people. And so there's, as I like to say, there's a lot of wood to chop. And we look at products through three lenses. First, is there a screaming customer demand that we can solve better than others? And obviously, that's number one. And number two, on the heels of that, as a capitalist, is there a revenue opportunity? And a third one that follows with that is there data? Right now, in the auto sense, in the wheel sense, as we talk about it, it's really number one for us. And protecting gig workers, because the protection gap is 1A for us in that space. But there's, the sharing property space is another area where data and the same principles can be brought to bear. And that's in our roadmap for 2023 and beyond.
It's the sharing of property space. Oh boy, yeah, no, honestly, because you think about every business being uniquely different and the risk that they introduce into a shared workspace, right? Like being able to, you have to have an understanding of the risk profile of any given type of business, everything down to the type of data they collect and store or have access to, and then basically be able to put that into a mosaic of, this location based on the all the pieces in the mosaic. This is the risk profile like that. Wow, what a challenge. And beyond that, I think to myself, well, driverless vehicles eventually maybe being a thing that takes some of the risk out. But then what about the human being on all these, for lack of a better term, task rabbit jobs, right? Where people are basically being paid to go out and do other people's grocery shopping. Those types of, that human interaction, that human piece is not going to be replaced anytime soon. So how do you properly basically ensure around that is going to be a major challenge?
It is a major challenge. We're engaged with a number of entities, and one of them is a leader in the United States in that space. And they, in terms of attracting, retaining gig workers and being that platform for gig workers. And they're a terrific opportunity for us to partner with them to bring solutions to that space, exactly the TaskRabbit space. If you think about what's happening in gig workers, There are some who believe, and I happen to be one of them, that by 2030, there's going to be a higher population of gig workers than there are non-gig workers in this space in the United States at the minimum. And you're going to see more and more of these task rabbits and related companies in that space. There needs to be, and there are going to be increasing protection gaps for those workers unless we do something for them.
Well, especially in the U.S., given dependence upon the employer for the retirement and healthcare benefits that basically that Americans need, right? Like that is a unique challenge, not necessarily present in other countries, but it's. Yeah, I mean, like, and as for anyone who wants to debate you on that statement about more gig workers than not, when you start thinking about the number of permutations or different things that are caught in this. So, for example, I need graphic design work done as a small business owner. I turn to gig workers already, right? Like I turn to the Fiverrs and Upworks of the world, right? So everything, when you think about the number of small businesses who need services, who don't necessarily are not going to employ a single person and would traditionally maybe have just not done it or muddled through it themselves or basically, spent way more money than they probably should have to get it done. The ability to get this stuff almost on demand is enormous. So I totally believe in that. I think a lot of there's a modularization of people's specializations. And if the company doesn't need you there 24/7. Well, not 24/7. You shouldn't be doing that. The company doesn't need you for your 40 some odd hours per week. Then that leans towards the need for gig work.
Couldn't agree more. I mean, you talked about the graphic designer. When I needed to create a pitch deck, because I'm not great artistically, I go to gig workers to get that done. You think about home care workers and all the other kinds. There's a study that was produced by the Geneva Association March last month, and it's a great example of what you just said. It speaks to the growing population of gig workers, and it also highlighted exactly what you just said, which is the United States has the greatest protection gaps of any country that has gig workers. Any developed country that has gig workers. So let's solve it here.
Yeah, and knowing how your country thinks, it will be solved in the private sector through private sector solutions, typically not government. So you're right on the ground floor of that. So that makes a lot of sense. So this has been great. I got 3 questions that I asked before we wrap things up. The first one is, if you had one wish for something you could change in your company or the industry as a whole, what would it be?
I wish we could move faster. I wish.
Are you trying to find more developers? Because that's a common refrain as well.
Yeah, I am. I'm always trying to find more developers, more affordable developers, if I could be precise. But the opportunities are there, and we have to be smart about prioritization, like any company. But the market pull is huge, and I just wish we could move faster. That's my number one wish. I think about that every morning, every evening, every night. That's my challenge.
I don't fault you. It's funny because I always. Well, that probably feeds into the second question: is what's been the biggest challenge to get a company to where it is today?
So it's the biggest challenge is we have a great team, great talent. We have to do what we do. We have to earn the pen, meaning insurance companies have to trust us, give us authority, give us the pen to write their balance sheets. That takes a great team. It takes great tech, and we're doing it. And we're the only MGA in America that's doing this in the space in which we're in right now. That's hard. That's been a challenge. So it's an uphill struggle constantly, and there is no substitute for having world-class talent because it's the only way you can get it done.
I get that. I mean, for those, the second you said hand to pen, I'm like, now we're talking insurance world. And a term I'm very familiar with. And for those who don't understand, like, end of the day, you guys are, your company's not the insurance company. Your company is the distributor of that. And, other companies are basically saying that you're handling the underwriting, which is not a small thing. Like they eat the risk on that. So it is very, very, very important that they learn to trust you and that you have the systems to back up that trust, because otherwise you're dead in the water, right? Like you're not going to stand up an insurance company on your own because the capital required for that is enormous. You're a distribution channel. So it makes a lot of sense.
Yeah. And if you think about the public markets have not treated some insurtechs kindly in the last 6, 8, 10 months, right? So that's a macro environment consideration that we have to constantly say we're not them.
Yes, the old. Are you trying to say that that even raising funds at this point is a little bit myopic? Everybody's looking at the last IPO or the most recent stock price. Unfortunately, no. It's a challenge.
It is a challenge. We will overcome that challenge too. But it is most certainly a challenge. This macro environment is not 2022 is not 2021. Let's put it that way.
That reminds me of a funny story. That a case study at university, and they were like, and it was a case study on a tech company. Like, where are you going to get all the money to do all this? And like, we're a .com company with an E in front of it in 1998. you think there's going to be a problem raising money? Right? So the judges just couldn't stop laughing at that answer because it was just like, yeah, you're right. Anyway, so yes, unfortunately, yeah, you're not the first one I've known who's headed into a funding round in a challenging environment. It's never fun. It's a little less fun at that point, but best of luck to you there. Last question I have for you is, what excites you the most about what it is you're working on and keeps on getting you up in the morning to keep on fighting the good fight of entrepreneurship?
I think it's the gig workers. I know it's the gig workers. We have a lot of passion for that, and I want to help the companies grow, but you can't spend any time at Uber and deal with hundreds and hundreds and hundreds of gigs workers and hear their stories and not feel for them, and you know that there's a big gap there. And we're actually in a place where we can help solve that. And that feels good. It feels good for us. It feels good for the team. They feel like they're doing something that's good for society. And it's always good to make money as well. But that is the best part. That's what motivates me.
I get that. You're basically protecting people who are just out there trying to make a living, right? That's and right. Protecting them from a horrible, one horrible accident and their entire livelihoods is gone, right? And if they're not properly protected, yeah, good on you. I can see how that would be incredibly motivating.
It is. Their car is usually their number one asset, right? So let's do something to protect them and ensure that their families have the additional income that they need to make ends meet. It feels good in the morning. It feels good in the evening.
Absolutely. Yeah. Well, the number one asset plus the number one generator of income now. So it's all coming together. Mark, thank you so much for this. I appreciate it.
Thank you very much. Thanks, Jason. Cheers.
Excellent. So that was this week's episode of FinTech Impact. If you are a gig worker company and need insurance solutions, by all means, please check out InShare. And as always, if you enjoy this podcast, please leave a review on Apple Podcasts, iTunes, Stitcher, SoundCloud, or wherever you get your podcasts. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.